So good morning. I just wanted to go over the market maker. If you're familiar with it or whether you're not familiar with it, this video will help you. So when you buy market maker, you either buy the single asset or the multi-asset scanner. If you buy the bigger package, then you get to scan multiple currencies. But I'm going to focus on the single asset for now. You also get the G-labs TDI, which is part of the template for the market maker's method. So we have the TDI, we have the days of the week, we have the EMAs, the 13, the 50 and the 200. We also have Asian ranges, anchor point high and anchor point low markers, ADR projections. We also have volatility bands, so it shows where price is likely to reach and pull back to before expanding further. In our panel at the top we have the pair, the cycle, which relates to the anchor point low or anchor point high, how many days it has been, which is replicated from down here. It's been 2.7 days since that formed. In real time, where we currently are from that low, if you look between the ADR markers, you can see that we are somewhere above 1.5, so 1.77. And then we can see on the 15-minute time frame, we also have a peak look, I think, from down here for an intraday cycle going up. So hopefully we should be able to reach some kind of ADR for the day between this point and however far it gets. So if you wanted to do that, you could measure the ADR there, for example, and then maybe say, right, price is likely to maybe get up to here. Is always possible. So yeah, that's a nice feature. Obviously with market maker's method, I'm taking it that you understand how it works. Obviously we use the 15-minute EMAs for entry, the Asian range for entry, and the TDI. Obviously I think our entry started down here late yesterday, so today's entry was just a slight pullback to the 50 EMA, and for a London entry, and that occurred off of the market baseline bounce. And as you can see, price is sharply opening up the bands here, so it's quite bullish, but it's looking overbought there, so probably another pullback and continuation to soak up some of this orders that are open in this part up here. These markers here are for they're aligned with the shark fins, so you can see that price shark fin down here, so this is probably the start of your move up. So yeah, you have an intraday cycle, it's at 0.59 at the moment. So that's from there to there, it's like 0.59, which is just where basically the EMA is locked to the peak on the intraday cycle. However, the main indicator focus and our main focus is, as BTM traders, is the H1 cycle, which is printed on all time frames below H4 and projects 3 hours. when we go up to the 4 hour time frame, we actually show the 9 ADR projection for the 4 hour time frame to try and allow us to anticipate if price is going to continue or whether we are going to get a peak reset first. So obviously, like a peak reset is where you get a anchor point low, but we need to then pull back in the higher time frame. So price resets, and then we get our free ADR move again, because price is pulling back for A1 or A2 in the higher time frame. In the higher time frame, that would look like this. Something like that. Just the pullback to continue that level. So yeah, if we jump up to the H1, we can see that we expect price to come in somewhere around here, and we may hit the 800 EMA, which often peaks form around. So that's another first target there, and possibly up to 3 ADR. Yeah, so you've got your anchor point low and the projection of the cycle, and you can almost trace out the angle of the lines to see where you potentially might go as a target. And let's have a look at the H4 now. Before I do that, let's just talk about the rest of the things. So we have the intraday cycle and the real time of the intraday cycle back to M15. So yeah, we might expect this one to get up to like 1, and that'd probably be as far as you might go that day. This one here, the 50/-15M, is literally when price touches this 50 aqua EMA, you'll get an alert there, well, a thing saying touch. This tells us that the gap between these lines, the average daily range, is 77 pips, and today we've done 36 pips. And then we've got shark fin 240, shark fin 60. So 240 minutes is the 4 hour time frame, and shark fin 60 is the 1 hour. That's the number of minutes. So on the hourly time frame, we had a shark fin here. So we may see a peak reset. So we may come up here and then come down. We'll see. Quick look on the 4 hour. So when we look at the 4 hour, we can see that potentially we're an anchor point high, you see. So we are actually moving more like this. So because it's fractal, you have to bear in mind that price on the higher time frame is doing this. But then each level here is a cycle on the H1. Excuse my washing machine. And then you're getting resets on the H1, and yet your cycles are on the expansion legs. Peak formation low, then you get a reset. level 1, level 2, level 3. So you need to make sure that you're on a higher time frame expansion leg. I think that's a good way to explain it. And if you're on one of these pullbacks or one of the shorter legs, you're going to get, or you should get, peak resets. And then a peak formation high or low when you approach the 9 ADR or in the higher time frame, you're going to see multiple resets as that pattern forms. Yeah, so as you can see, like this cycle for the 4 hour would be likely to approach 9 ADR, so we're probably pulling back here. This is probably the pullback to make the reset, which would appear as a reset on the H1, and then we'll probably see the next levels down and the cycle on H1. Yeah, so on H1 we'll probably see this reset and then continue down. So I wouldn't be surprised if this takes out the bands, touches this, comes close to this EMA, and then continues down. Yeah, that's the best way I can really explain, I think. Let me just pull up a drawing. So I think this drawing here sums up quite well what we see on the different time frames. So this is the H1 cycle. This is the first leg coming out of the W on the second leg. So this would come up, pull back, come up, pull back. So always as we complete a level in the higher time frame, so the sister of H1 is M15, where we have the intraday cycle, 3 to 5 day cycle, 1 ADR per level, so 1 ADR between here and here. On the M15, what we're likely to see here is a 15-minute peak formation low with 3 small levels of 0.33 ADR as we complete this expansion leg of the H1 to take us into level 1. So at the end on the M15 we'll form like a mini peak formation high. Then as we pull down we'll pull like a mini peak formation low to reset, because the real move is the higher time frame level 2 expansion. So after we reset we'll push up, push up, push up, and then 0.33 ADR, 0.33, 0.33 until we've hit our 1 ADR. 3 levels on M15 equals 1 level of H1. And then we'll have our peak formation high at the end of the day, the pullback or consolidation, reset of that cycle to then take the expansion leg for the H1 into level 3. So these expansion legs are the ones you want to be trading, because on the pullbacks in the lower time frame you're going to experience a reset. So the sister of H4 is H1. So 3 ADR on H1 equals 3 levels, each bit here, 3 levels, each bit here, 3 levels. Each expansion basically is 3 levels. So H1 is 3 ADR cycle, M15 is going to be, each level on H1 is 1 ADR, so divided by 3, 0.33. Each push on the M15 is likely to be 0.33 ADR. So that gives you an idea of how to use the ADR, the intraday cycle real-time range. So it's holographic. This cycle fits inside this one fits inside this one. So the sister of H4, H1, trade the expansions, avoid the resets. So if you flip over to H4 and you see that you've moved 3 ADR, expect to pull back because you're going to be here, pull back a bit, and then you'll see a peak reset, push up on 3 levels of H1, 1 level of H4, reset, reset, continue. So yeah, each one of these pushes on the H4 after the reset will be 1 ADR, 2 ADR, 3 ADR, reset back into peak formation low, which is the pullback, trade another 3 ADR up on the expansion, peak reset, pullback, peak reset, peak formation low, and then pushing up to complete the third level of level 2 to level 3 expansion on H4. So this will give you your 3, 6, 9 ADR. This will give you your 1, 2, 3 ADR. Primarily the market makers method concentrates on H1 and M15, but I wanted to bring in the principle of the resets so that you can understand why sometimes the peak will flip from peak formation high to peak formation low. It's because the two time frames fit inside one another. So when we come back to our as we come back to our chart here, you can see that we are in our 3 ADR cycle on H1, but when we go to the H4, sorry, let's look at that. So we've got anchor point low on the hourly and the M15, so follow the M15 if you're unsure, because that will react first. That's another way of keeping you out. So you could trade that maybe up to 1 ADR or somewhere close to that, being aware of these. But just bear in mind that on the H4, I think we're seeing a reset play out, because we still haven't reached our 8 or 9 ADR cycle. So yeah, so you could expect to see more to the downside. We've already made like a almost like a shark fin down here, so make your first take profit at this low here just in case, because price could have completed the 3 levels but in a more confined space. Yeah, so that's basically what I wanted to explain, was just that the levels sometimes on the lower time frame will play out like that before they go down, but what you're seeing in the higher time frame is just the expansion and the pullback. This part being the pullback. This being the pullback here, being the pullback there. So you'll get like a pullback and expansion with a reset in between. Back to that drawing there. This explains it the best. I didn't draw it very well there. So yeah, you'll get your 3 levels, then and off you go. Hope that helps, guys. Trade safe. Always trade on the side of caution. Protect your capital and enjoy the indicators.